What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today, my friends. I hope you guys are having a wonderful day. Sorry, I am about 30 seconds late. Just a little bit busy here, but go ahead and hit me with a 1 if the audio is good and if you can see my screen. I'm gonna go over to the Twitter and retweet this, and we're gonna get the party started. So another winning day today. We were able to short in the morning, and I'm gonna walk you guys through that. So let's do that live now. Come learn and earn how to fib. All right. So let's step right in. Okay, guys. So let me go ahead and reset this chart. So over here, we could see obviously today was the FOMC announcement here at 2 o'clock. They did end up raising the rates by 75 BPS. So, you know, we had our typical fade the breakout scenario here, which I'll be getting to you guys. But what I want to do here is I want to go ahead and start off first with just showing you the trades we took today. Okay, so let me just make sure that the community knows that I am live right now. So that's why we got to keep live on YouTube. Come by. All right, to get everybody ready to go. Okay, so let's start off here. And all right, do you guys want to do the bigger picture analysis, or do you want to look at the day trading first? I'll leave it up to you guys. So hit me with a 1 if you want me to do the bigger picture look on SPY, or hit me with a 2 if you want to start with the day trade and look at the shorts we did. Which one do you guys want to do first? So 1 for the bigger picture analysis and 2 for the basically just the day trading, and then we'll get back to the bigger picture. So what are you guys thinking? Okay, so I see a good bit of 1s. All right, so let's go ahead here. I forgot what 1 was again. I think 1 was the bigger picture analysis. So here we go. Okay, so yesterday, guys, we talked about the Nirvana pattern, right? So we said, hey, we have the Nirvana pattern. It's the one in blue, and we got exactly what we wanted, right? So we broke out through the Nirvana and we pushed straight down. Similar to what we did last time with the Nirvana, where it took a little bit of time, but it started to rally. This is exactly why we trade these patterns, right? And the Nirvana pattern is the pattern from my book. It's the one in the book. You guys get that for life. And that's what we're looking for. An inside-outside bar is meant to trap people. That's why I have this pattern in blue, because it's so important. You trap people. So you could see that the bulls bought the breakout. Let's go ahead and let's do an analysis of the candles. So we had this inside bar on Monday, and we gapped up, okay? And we trapped a lot of new buyers that were chasing breakouts. And then from then, they've just been straight getting punished. Over and over again, they've been getting punished, okay? And one thing that's very important, if we do an analysis on the last outside bar, if I take that Fibonacci from the high to low like this, guys, so let me just go ahead and fix this up here. You can see that we came back into the golden zone of that bar, which is between the 50 to 786. So there was a lot of traps on the table. And right now, if we go to the weekly, we could see, guys, that this is an exceptionally nasty weekly close. And that's why on the Qs, right? Remember on the Qs, I posted the plan for the Qs, because this is exactly what I was hoping to happen. So we had our doji right there on the Qs, guys, and we broke the low today and we entered short. So this is for anybody in the Trading Wars Army on YouTube. Just click the join button right there, $3.99. Let me just send that to you guys. This is what all this analysis we were doing was about. So remember, if we go to SPY, if I take our Fibonacci from our high to our low, right on that 618, guys. It does not get any better than that. So right now, the 618 is trading. There was an algorithm that was there. So the goal of this 618 is to make a new low. Okay, that's the goal of the 618, to make a new low. All right. However, I do think there will be an attempt by the bulls to save this low. So if I take it the other way right here, let's draw the golden zone for the bulls. So right in this box, I believe there will be a chance for the bulls to save the low. So between 369.50 to 357.50 in this zone, there's going to be an opportunity for the bulls to try to buy the dip here to continue their leg. Okay. And it's going to look something like that, But the easy money was already made. So the easy money was what we've been talking about for weeks, is just this daily 618. Okay, so that's what we've been talking about for weeks and weeks and weeks, is this 618. which we take from this high and bring it down to this low. And there is the 618, there's the Nirvana confirmation, and there is the rejection. And this is so powerful, guys, because guess what? This is the same thing that we do on the 5-minute chart when we trade, right? We go to the 618 and we look for the confirmation candles, okay? And this is the same thing, exact same thing. And I love trading so much because it is fractal, meaning what's happening on the 1 minute, the 5 minute, the 15, what is happening on these time frames is also reproducing itself on the higher time frames, which makes it crazy. And that's why I teach you the Fibonacci, because we can do it on all time frames, whether you're an investor, whether you're a day trader, whether you're a swing trader. And what it always allows you to do is get good risk to reward. So let's talk about that. So the market rallied for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. Okay. In 12 days, the market went up. So what do you think happened to the puts on those 12 days? What do you think the put prices were over here? So let's say, the 384 puts, what do you think they were? Were they expensive or were they cheap? Hit me with a 1 for expensive, hit me with a 2 for cheap. Boom, Mr. Sean Ludwig with the 499, Rich the GOAT. You're the GOAT, my brother. Thank you so much for the support. I appreciate you. Right? So we're allowing ourselves to get the deals. We're deal hunters. And when we come and we get the deal and we get trades like this, that's exactly why I was looking for the cues to take the short, okay? Because it's all about getting a good deal. You're going to be wrong. Trust me, it doesn't seem like that because lately we've been on a hot streak. Lately we've been crushing it. Lately we've been making a lot of money, but you will be wrong at some point. And when you trade the fibs will protect you because even if you are wrong, you're not going to lose as much as when you chase the breakout. And that's going to take us to the topic today where we go through the FOMC because we're going to see yet again, many retail have been exploited during this FOMC following their gurus and have been completely destroyed today. And I'm going to show you how they were completely destroyed. Okay. So let's step right into it right now. Hit me with a 10 if you're excited, guys. I love trading. I love it. I absolutely love it because if you are disciplined enough to follow a system, you can make a lot of money. If you're not disciplined, this is not the place for you. But it's also a place where you can learn to become disciplined, right? And that's something that trading has helped me throughout my life. Is being a better person. You might not even think that's possible, but when you are at rock bottom, okay, when you start trading and you follow everybody and you watch the news and you do all of this stuff and you lose $20,000 trading options and you're at rock bottom in your life, that's when you figure out who you are, okay? Guys understand what I'm saying? Let's do it now. So let's go ahead here and let's get our replay button going. So where's my replay? Right there. And I'll walk you through the trades we took today. So the most important thing, guys, we need to draw the previous day's high and low. Always important. There's not a day that goes by where we don't draw the high and the low. You need to see where we're opening. Okay. You need to see where we're opening in order to make the trade. So let's go ahead now and let's get into our trade. Excuse me, guys. So our short plan was 384. So why did I want to do 384? So a lot of people ask me this. There's a lot that goes into my levels. There's fib, there's average true range, but there's also psychological aspects, right? 384 is a big round psychological number for the market. So that's another reason why I wanted to use 384 as my level to short. Okay. So we have our setup here. So this is our short trigger, which means short at 384. Okay. So the chart is ready to go. And then let me go ahead and take you guys through my live commentary in the morning. So good morning, Inside Open. Let's be careful today, friends. FOMC also, so keep the size small. Our short trigger is 384. Keep an eye on it. So you can see, guys, I said 1 minute to go. High chance we will short trigger at open. Who's ready? So because when I was looking at the pre-market, we were literally right here. Okay, so we were hugging that 384 level. Okay, so I was expecting that we're going to touch that level right at the open, and that's exactly what happened. So you can see right here at 9:30, short trigger activated. Okay, so the short got filled right at 9:30. So I'll show you right here. Boom. Okay, and this is going to be a little bit crazy, guys. Let's go to the 1 minute so I can show you. I kind of got some goosebumps when I traded this because the exact high of the candle was 384. So it was just like, holy shit, you know, like that's an awesome trade. So it touched our 384 level and then used that as resistance. And then you can see right here, send the red, target 1, 383.62. Next target, yesterday low, 383.30. Who's banking with me? Because we absolutely just smashed right through it. You can see that. That first, within 5 minutes, guys, bam. So actually within 1 minute today, the target was already achieved. And that was the fastest day trade of the year, 1 minute, okay, for SPY. I think I've had a trade this year that was like 45 seconds. That was an automated trade on stocks. But for SPY, this was the fastest trade of the year, literally 1 minute. Okay. So from there, we continued and made a new low, and then things started to get choppy. And we expected there to be some chop because of the FOMC, right? We expected that. But that does not mean that you can't make money before, right? Like you saw how clean this move was. So don't get discouraged. You know, a lot of people are like, oh, it's FOMC. I can't do nothing. I can't know. There's always an opportunity. Just be careful and understand you don't want to be taking trades right before the FOMC, right? So if the FOMC is at 2 o'clock, you don't want to take a trade at 1:55 because there's a high chance you're going to get poked out or it's going to be a problem. Okay. So after we had this push down, if I take the Fibonacci from the high to the low, I'll go ahead and add the 50. So you could see, again, we had 50% rejection. So 50% rejections has been the theme this week. It hasn't been going deep to the 618. It's been going to the 50. The 50, we also had this double inside bar confirmation. And we also posted it here in the Fibonacci live setup room. So you can see right here, rejecting the 50 and developing an IB. Let's see if it wants to make a new low of day. Personally, for me, I like the 618 pullbacks more because obviously I'm going to get a better deal. But if you get the confirmation candles like this, guys, you can take the confirmation as well. But if you already shorted at 384, why would you want to go and chase something again? Just let just ride your runners. All right. So hit me with a 10 if that makes sense, my friends. Did you guys understand that? All right. So let's continue with the price action now. Okay. So after that first morning leg, we had this afternoon leg here. If I go from high to low, so you can see we rejected on the 50. We put in this pattern. What pattern is this, guys? From the book, what pattern is that? So this is our Holy Grail pattern. Remember, I've been telling you how powerful this pattern is. That's our Holy Grail. And then it also had another inside bar. So it was a Holy Grail with an extra inside bar. And that took us right down there for a nice scalp. Then we rejected the 50 one more time, guys. And then we made a new low. So the afternoon leg was really, really clean because we had a lot of confirmation on the 50. So you could see we had the Holy Grail double inside, and then we had another inside on the 50. So that's whenever we trade the 50% and the afternoon leg, like I tell you guys, I want to see a confirmation candle or I want to see two touches because this becomes a double top, right? So there's your double top right there. We have that inside bar confirmation, and that took us right back down. And then from there, we started to approach. So just to show you guys, this was our afternoon leg right here. We just posted that in the Discord. And then from here, guys, we started to get into the FOMC, which we're going to talk about right now. Okay. So we had our shenanigans before the FOMC. So you can see, where are the new traders getting stuck? Let's write this down. Okay. So first and foremost, the new traders will chase this short. So I'm going to write this down, and at the end of this, I want you to tell me if this sounds like something familiar to you if you've gone through this, okay? So they're going to chase the short. They're not going to use the fib because of FOMO and poor guidance. So the rookies are going to chase here, right? I'll tell you why. They're going to draw these lines like this. They're going to do stuff like this, and they're going to say, here's my breakdown. I'm going to short right here, and then they're going to take it, and then it's going to reverse on them, and then they're going to bag hold, and then they're going to say, you know what? I'm just holding this through FOMC, and then they're going to blow up their account. Whereas what I'm trying to teach you is take the fib from the high to the low, come in on the 50, so you have a better entry. So when you do make a new low, you'll actually make money. But if you short here and it makes a new low, you're not going to make any money. Hit me with a 10 if that makes sense. Does that make sense? This is the difference, guys. This is the difference between reading some patterns or some flows and modes in a book and actually trading every day. Because if you trade every single day and you do these breakouts, these flags, you're going to realize you're not going to make any money. But you can't know that unless you trade. That's why the people that are promoting this stuff, they don't trade. That's why it's easy for them to draw that. When I have to draw this triangle, it hurts my heart. Because I said, why would I take that when I could come in here on the 50? I could come right here on the 50 instead and make way more money. And we have the confirmation. Look, we have the Holy Grail right there. It hurts me, guys. All right, but this part hurts me the most. So let's get into it. So that's the first part. Now we get into the FOMC. So watch this. So this is 150, 155. There we go. All right, so there's your FOMC candle. Okay, so how does the new trader feel when this candle comes in? Okay, I'll tell you exactly how they feel. Well, I missed it. The market is rallying. You know, everybody that said the market was going to crash is a liar, and it's time for me to buy. So what do? So they're a little bit nervous here. They wait a little bit. This pulls back. We take our Fibonacci from the FOMC candle, from the low to the high like that. Watch this, okay? So we don't pull back deep. We don't get to the 50 or the 618. Instead, we make a new high. Right here, when we make this new high, this is when the rookies come in. Because this is when they say, I need to buy calls. Market is going without me. And someone said, market will rally. Right there. And then what happens? What happens after that? This is what happens. Bam. And then they're like, well, I'm already in it. I'm going to buy more calls down here. And then this happens. And it's over. And then that person maybe have traded really, really well for the last 3 or 4 months. And within this one day, it's all gone. Hit me with a 10 if that makes sense. Whereas, okay, let's trade the FOMC the right way. So let's do that instead. Okay, I'll show you how. I'll show you a way that's not necessarily the right way, but at least you're not going to blow up your account. So the first thing is we had the push up. We draw our fib. We don't get any fib action, but we get this inside bar. Okay, so we have an inside bar instead. So instead of risking this whole bar, we can say, all right, I'm going to try this inside bar. I'm going to take it when it breaks the high, put my stop at the low. Okay, could do that. Or you could be patient and you could say, hey, guess what? The Holy Grail is here now. So this is one of the patterns, the same pattern we saw earlier in the day. Here's my Holy Grail. Let me try that with the risk management. Here's my entry short. Here's my stop loss. And then there's your collapse. See that? And even to the downside here, if we take our fib from our high to our low, you can see there weren't any proper pullbacks, right? But at least we had the fractal patterns to give us an edge. So that's why we have them. That's why we have our Holy Grails. That's why we have our Nirvana patterns, our double inside bars, because they give us a fixed risk to reward. So we know if we're wrong, we have to get out here. If we're right, we can ride it. All right? And I've seen it a lot, guys. And why am I saying this to you? Because I used to do that. I used to be the guy buying right there. I used to be the guy on that wick because I used to get the FOMO, right? So that's what I'm telling you guys. Make sure you have the plan, have the system. And that's why we do the fibs, we do the fractals, and we keep it simple. So hit me with the 12 if that all makes sense there, right? And that gets us back to where we were on the daily chart. Now we had our nirvana, we broke to the downside, and that is currently trading right now. So that's where we are. So for me personally, guys, on the day after we took that short at 384, I covered down here. We were able to get a little bit more off of this afternoon 50% leg. But if you've already hit the trades and you've made so much money, like on your short here, there's no need to be in the FOMC, because more than anything, any FOMC event is gambling. It is 100% gambling. There's strategies like I'm showing you that's going to help mitigate it, but nonetheless, it's still gambling because it's not predictable, right? There's no method to the madness. But I will say, one thing you can do for sure is avoid buying the breakout, because it's just a matter of time when you keep doing that you will blow up your account. All right. That's very important for me to share. Okay. All right. So the other thing I wanted to talk about was Meta. So Meta, that was our big short that we took on Monday, and I continued to short Meta today as well. Just been hitting this name, guys. It's just been really, really nice day trading wise. So let's go to the trade plan that I posted yesterday. So Meta was right here. Our short was 93.94. I'll just do a quick recap on this and just show you how I traded this. So 93.94 right there. Okay, we'll hit the replay and I'll just walk you through. So did I share this one on Twitter? Let's see. See if I shared this on Twitter yesterday. I think I did. Yeah, so Meta 93.94. I shared this one yesterday. So we shorted this at the beginning of the week, and today we shorted it again. So 93.94 was our line in the sand. So right at the open, guys, we broke our level and we flushed right down. So that's what I really want to see with Meta. We retested the level again and made a new low right there. And that's pretty much where I was able to get out the majority. Or at the very least, use a trailing stop loss if you want to go for the bigger targets. So unfortunately today, there was no fib pullback. So the trigger worked really, really well. And I always teach you guys, 2 legs is a good way to scale out, right? So you push down, you pull back. On that second leg, you want to get out the most of your position to be safe. Or if you want, you could just go for a home run, right? But if you go for a home run trade, you have to understand that should you move your stop to break even or should you not? Because if you don't, this can happen to you, right? Where FOMC comes back up and potentially stops you out. But at the same time, if you had a good stop loss here, you probably could have rolled through the FOMC and taken it back down. Okay. So Meta, been shorting that all week long. Just wanted to give you guys an update on there. All right. So let's do some scans and we'll wrap it up. As always, guys, check me out at tradingwars.com. That's the place to be. If you get any one of my 3 books, you get 1 month for free and you get the premium indicators. All those indicators I showed you, the Nirvana and the Holy Grails, you can get them with the purchase of a book for life. Okay, you get the indicators for life. You add them to your chart and you save them. So guys, if you're interested in that and more about the Holy Grail, if you want to learn more about the Holy Grail in Nirvana, I recommend the SPY Options Mastery book right here in this section under, let me find the section right here. So Trading Wars Chart Pattern Summary, it's going to talk about them there. And also we'll talk about it a little bit in the Lotto Strategy section. And right here, Fractal Entries or As Above, So Below Trades, Trading Wars Patterns on Lower Time Frames. So this is the one. So check this out, page 22. For anyone that has the book, you can read up on it there. Okay. So the Holy Grail and the Nirvana are just the inverse of each other. So they're just the reflection of each other. So let's go to the scans and let's see what we have right now. So from a Nirvana perspective, we have EA Sports, Electronic Arts. That's a pretty big Nirvana. Not too interested in that one. Let's see if we have any blue raindrops today. I don't expect there to be much on the scanners because of FOMC, but there is an interesting pattern here on Johnson & Johnson. Johnson & Johnson has been it's been rallying pretty strong while the market has been going down. That's something to keep an eye on. That could be a potential trading opportunity. Ford, forward is always a nice little lotto play. And let's go ahead and see if we have any holy grails. I doubt we'll have any that I trade. Yeah, so I don't trade any of these. Indra Patel, welcome to the Trading Wars Army. Thank you very much for joining, my friend. I appreciate you. Thank you. Thank you. All right. Okay, so there we go, guys. I don't think there's going to be too many picks tomorrow, but if you look at the futures market right now, we are trending down. We were trending downwards when we opened, but now it looks like we're rallying. So let's go ahead and just look at this here. So we opened right here, okay, and then we had this big push down, and now we're starting to rally back in. This could just be a lot of chop. So here's another Nirvana right here, guys. Pretty funny. But yeah, let's see what happens overnight, and we'll be ready to rock and roll again tomorrow. So thank you very much for your time. I appreciate you guys. Hope to see you in the room tomorrow if you want to trade with us live. Appreciate you guys. And yeah, go ahead and leave a comment, like, subscribe. If you leave a comment, you'll have a chance to win the giveaways that we do weekly. I hope that this was a great learning lesson. And as always, check out the YouTube channel. I see some questions in there. A lot of your questions are answered in my playlists. And I have a lot of good videos on here, guys, if you want to go back in time and just check them out. The trigger trading video, the orb videos, a lot of the stuff are in there that can definitely help you out. All right. Have a great night, and I will see you tomorrow.